Good morning, everyone, and thank you for joining this particular webinar on electronic tax invoice management system. We all know it's something that the regulator KRA is quite insistent on, and as tax practitioners, we understand the reasons behind it, especially towards expanding the tax base. So we won't speak much. I won't be speaking much. Today we have very good presenters. We have Lena Onyango, who is a partner at our firm. And we also have Hakamba Wangwe, who is a chief manager at the Kenya Revenue Authority, where she's in charge of eTIMS, and we could not have a better person than Hakamba. So welcome, Lena, and welcome, Hakamba. And before we get to start, just to let you a little bit about our firm, we are a Pan-African practice with offices in Kenya and South Africa and Namibia. And we have, it's a full practice law firm, business law firm, specializing in not only tax, and that's the reason why we are here, but also on commercial law, mergers and acquisitions, corporate employment, dispute resolution, environmental law, data protection and IP, competition law. So name it, anything business, we are there for you. So without further ado, let me welcome Lena Onyango to start us off, and then we'll have Hakamba coming on later, and myself also being involved at some point. We'll have questions at the end. So feel free to type those questions in the chat box where we'll be addressing them towards the end. We have a very good time for the Q&A session, about 30 to 40 minutes. So don't worry, we'll be here to address those questions. Thank you very much and welcome, Lena.
Lena, you're on mute.
Good morning, everyone. I'm just getting the slides. We have a very short PowerPoint presentation. One second, please. Just give me 1 minute, please.
Lena, would you like me to pull up your slides? Lena, you're on mute.
Are you able to see my screen?
Yes, we're looking at the Teams screen.
You're all able to see my screen. Thank you very much.
We're not able to see the slide. There we go.
There we go. Okay, everyone, as Alex has stated, my name is Lena Onyango. I am a partner in the Tax and Exchange Control Department. I will be making a brief presentation on the issue of eTIMS, which is why we are here. Now, eTIMS has been a very contentious issue in Kenya. Cutting across different sectors. We have the medical sector with the doctors recently issuing ultimatums for the suspension of eTIMS rollout. But what seems to be very consistent is the fact that KRA is keen on nabbing suppliers, enhancing tax compliance by preventing tax cheating and tax evasion schemes, and bringing into the net small tax traders. But the question is, what is electronic tax invoicing? As the name suggests, it is basically an invoice that is generated automatically and validated on the system. And the Kenya's version of the invoicing ensures that there's the use of electronic invoices for businesses that are operating in Kenya. Now, the reason why the eTIMS or e-invoicing was introduced in Kenya, as I've already stated, is it is for purposes of ensuring compliance and promoting compliance, to curb evasion and ensure timely detection of fraudulent traders. Additionally, eTIMS is aimed at ensuring that there is easy record keeping for taxpayers, which would now result in lowering tax administration costs, and again, providing easy access to tax records and information. Now, just to give a brief highlight of the history of eTIMS, it goes way back to the 1960s, that is more than 6 decades ago, where the electronic data interchange systems were developed for purposes of allowing businesses to exchange data. Now, about 40 decades later, in the 2000s, we saw now governments and countries recognizing the need for enhancing tax compliance and appreciating the fact that electronic invoices would play a key role in reducing fraud and making it easier for their taxpayers to carry out their businesses and even report their tax reports with the Revenue Authority. In Latin America, Chile was the first country in 2001 to introduce voluntary e-invoicing, and later this has now been adopted across Latin America in countries such as Peru. From an African perspective, we have a number of countries that have adopted the eTIMS system. Case in point, we have Uganda, which enforced it recently in 2021. There's Rwanda, there's Zambia, Ghana. And what you can see from all these countries, again, it seems to have targeted VAT registered taxpayers, and I believe Hakamba at a later point will address who are the key targets of the eTIMS from a Kenyan perspective. However, considering the experiences and the feedback from these countries, there are certain lessons that Kenya might learn or may choose to learn from the implementation, which could be also, should Kenya take now a strategic way of implementing it, or should we take a flat out cold turkey sort of way of implementing the eTIMS as we have? Or can the revenue authorities consider coming up with implementing the eTIMS in phases? So those are lessons that we can learn from the other countries. I believe also Hakamba will be able to address this from the Kenya Revenue Authority perspective at a later stage of this presentation. Now, from an international perspective, the OECD also recognized that e-invoices are important in enhancing tax compliance. And more importantly, the OECD recognized that there is need for proper legal framework to regulate the creation, adoption, and administration of eTIMS. And this would be to address issues such as data exchange. We all know that data protection is also an issue that is a bit contentious in Kenya right now. There is also maintaining e-invoice standards, the level of integrity of the data that is collected, and the authenticity of the data. So some of these issues are important in terms of ensuring that the legal framework in Kenya also addresses them. And we hope that from this discussion, we'll also be able to give sort of a deep dive into it. Now, looking at Kenya, which is why we are here, just tracing the history. In 2005, the electronic tax register, the ETRs, were introduced in Kenya, which basically needed to accompany receipts for VAT purposes. Now, 17 or so years later, the system was improved to include the tax invoice management system, and now that has now advanced to now an even more complex system that now we call the eTIMS, which was introduced through the Finance Act 2023. My colleague Alex will now go into the legislative framework around eTIMS. I will allow him to do that.
Good. So thank you, Lena, for that. We'll quickly go to how eTIMS was introduced through the current laws in Kenya, and basically a status of where we are. And if I can quickly do that, we saw an introduction of Section 23A of the Tax Procedures Act, which granted the KRA, the authority to establish an electronic system through which tax invoices could be issued, basically the eTIMS system. And with it, we also saw the law being quite clear and saying that all businesses must issue electronic invoices through the system established by KRA. And also the KRA was given a leeway to provide exemptions for persons who would necessarily not be required to issue eTIMS invoices. When you look at Section 29, Section 59A of the Tax Procedures Act, again here it's more or less speaking about how that data collected through eTIMS will be managed, and of course KRA being required to set up a data management system to ensure that that information collected through eTIMS is used accordingly. And of course, with that, we also had Section 86 of the Tax Procedures Act setting out the penalty for not complying with the eTIMS system. We recently saw the Electronic Tax Invoicing Regulations 2024, which set out various transactions which could be exempted from eTIMS, but I'll let Hakamba speak to this when she's making her presentation. In terms of timelines, there are many people who believe that eTIMS just began the other day, but it became, quite mandatory from the 1st of September 2023, where businesses were required to generate electronic tax invoices through the eTIMS system. Then, as we came close towards the end of the year, taxpayers were given an extension up to 31st of March to ensure that they are already onboarded into the eTIMS platform and they're issuing eTIMS invoices. But then when you look at it, especially from an income tax side, from the 1st of January 2024, if then you issue as a business an invoice that is not an eTIMS invoice, then or you're issued one and then you record that as an expense, when you're doing your tax computation at the end of the year, KRA will not allow that expense which was given to you through an invoice that didn't pass through the eTIMS system effective 1st of January 2024. What that means is that when you're doing your tax computation at the end of the year, the way we do it, you have your incomes less your expenses, and you have to deduct tax deductible expenses. All expenses that haven't gone through the eTIMS system will not be allowed as tax deductible expense. And what that means then for the business is that you will, at the end of the day, have to record a higher profit and pay higher taxes just because you did not ask your suppliers to give you eTIMS compliant invoices. So that's a key date to mark. There are some questions that have come up around whether is it mandatory for every business to be on eTIMS? Is it just for VAT registered taxpayers? I'm sure Hakamba will be speaking to this, but the law as currently worded in Kenya is that it covers every business unless your business is specifically exempted from the provisions of the eTIMS requirements. My colleague Lena has already spoken about the current trends in terms of, for example, the doctors saying they don't want to be onboarded onto eTIMS. We have seen the farmers as well and small businesses, call it avocado farmers, call it sugarcane farmers, saying we don't want to be in this particular program. And I'm sure Hakamba will speak to this in terms of the solutions that KRA is suggesting in terms of reverse invoicing and things like those. And also we've seen attempts by the KRA to also make it a little bit easier to be able to issue eTIMS invoices, be it through USSD or through platforms or apps that could be easily accessible by anyone who's, for example, not particularly tech savvy. So even though this slide says it's time for Q&A, I'd suggest we take the questions after Hakamba's presentation. So Hakamba, who is the Chief Manager at KRA, will bring in some practical aspects of what is happening with eTIMS and the kind of solutions that they are proposing, and then we'll have a session for Q&A. Welcome, Hakamba. Thank you.
Thank you. Good morning, everyone. Please forgive my background. I've had to take my session outside, but I will try to make the best of it. I hope you can hear me.
Yes, we can, Hakamba.
It's clear. Okay. Okay. So you can go to the next slide. I think, for most part, the highlights that we've been given, thank you, by Alex, at least give us an introduction to what we need to cover today. I'll just give a bit more information because yes, it is good to recognize that globally, the advancement are towards implementation of electronic tax invoicing. And for East Africa, I think you forgot Tanzania. I think for the countries that are ahead with this implementation, we have Rwanda and Tanzania. Rwanda began actually in 2012, not 2021. For Uganda and ourselves, we are the ones who are still taking our baby steps. And I think if you have your ear both here, and I think you've highlighted on the challenges already that we've been that have been put before us, for example, by the Medical Association and the farming fraternity, so to speak, and then look across the border, Uganda, you know what is going on, because it is now that we are starting these implementations. But then also to say that it wasn't unexpected, because for this implementation, you can see even globally with the global advancement, it's really a new concept for many countries. And when you talk about countries now, look at the citizens, look at the taxpayers, just having that bit of change management and buy-in for this solution to be implemented, it's going to take quite a bit of initiatives on our end, both KRA and actually the tax-paying fraternity, to be able to adopt and conform to the new way of working. Now, for Kenya, I think our implementation is very similar to some extent to the Rwandese implementation. So eTIMS is actually a customized version of the Rwandese software, and we are offering the approach is that we are offering a free software to our taxpayers, so that for the taxpayers who have an electronic gadget, if you have a laptop, if you have a phone, if you have a tablet, then and your business is not that expansive, then you can use the free software, have it installed for purposes of electronic invoicing. Why we are saying this is because when we started with the Teams implementation, I think the challenge that was put before us was the cost of implementation. And to mitigate that, then we had to see if we can deliver the software that is a KRA customized software for taxpayers to use, so that everyone has an opportunity to comply. As you can see, with this software, then we have the flexibility that we needed. We are not confined to the device-based approach, where you only had to use an ATR device. Now you can use your electronic device depending on your level of comfort for purposes of compliance. And with this software also comes the inventory management system. So for the smaller taxpayers who naturally would be operating on a manual platform, then in addition to giving the solution, the software solution that enables them generate electronic tax invoices, we have also given a provision for stock management, so that they can have this functionality also in their business premises, and also comply with the legal provisions, because by law, Section 23A, the Tax Procedures Act, has given a mandate for taxpayers with business income who are resident and non-resident with permanent establishment to not only generate electronic tax invoices from a system that is recommended by the commissioner, but also maintain their record of stock through that system. So in this whole process, apart from enhancement of compliance and improvement of tax revenue, we also want to simplify the tax filing processes. And you've seen this. We've started for a bit with the VAT registered taxpayers with the VAT return, now quickly progressing to other tax heads upon full rollout of the solution. Now, earlier, Alex, I think, mentioned who should comply. There was a prospect of having a threshold of taxpayers not being onboarded in the solution. But with this, new challenges were identified because the traders were posing a question that if someone is making a sale to me or I'm receiving supplies, how do I know this person is above 5 million or below 5 million threshold? It is very different for non-VAT registered taxpayers, because for VAT, even by PIN certificate, you can tell someone is VAT registered and therefore above the 5 million threshold or assumed to be above the 5 million threshold. But for non-VAT registered taxpayers, we don't have a document that actually certifies them to be above 5 million. So with those challenges, then the implementation of eTIMS, when we're asking who should onboard, you can see the pictures. Everyone, because the law has made provision for business income. It didn't say which business income, except for the exemptions provided for, which you can talk about, residents and non-residents with permanent establishment. So it's all persons who have business income, whether or not they are registered for VAT. So previously, up to 2023, we focused on VAT registered taxpayers, but you can see now the attention is shifting to those who are not registered for VAT. We can go to the next slide. The solutions that are available for the main eTIMS solution, we have the client solution, where I talked about you installing a software on your device, then you are using the client solutions. And then for those who primarily just deal with services with no goods that are being moved as part of their business, then they can use the online portal. And most law firms are actually on the online portal, because this one has been restricted for services only. And then we have the system-to-system integration. For those taxpayers who have advanced billing systems, they have the ERP solutions, or they have the QuickBooks and such, then they can connect their system with us through an integration process, and anytime they are doing their transactions, they are able to avail the invoice data to us on real-time basis. The advantage of this is that it gives you a bit more flexibility with the customization that you can do within your system, so that it better conforms to your own business operations. And then we've always talked about the simplified solutions because of now the phase we are in, where we are targeting now taxpayers who might be limited when it comes to technology. Then we have also availed a solution on the eCitizen platform and also on USSD. So ecitizen.kra.go.ke. Sorry, there's a noise on my background. And then we have *222# USSD solution. If someone needs the details of how to access or how to go about this, then we have the guidelines on the KRA website, www.kra.go.ke, where we have all the guidelines for the different solutions you need to onboard for purposes of your compliance. Now, I mentioned about the stock management module that is a requirement by law now for taxpayers to maintain. But then from the regulations that were just gazetted, we have exemptions to this. Those who may transact, generate the electronic tax invoices without necessarily using the stock management module. Persons providing services such as yourselves, you are using the online portal, you'll see that you don't have to use the stock management module. those on the simplified platforms don't have to use the online platform, the stock management module, because these are taxpayers, we have already said, that are limited when it comes to technology. So we also are trying to get them used to using a simplified solution for purposes of compliance. As they advance in their business, then probably they can also adopt a more advanced solution. And then we also have any person using a system prescribed by the commissioner. For now, we might be talking about the eTIMS solution. Those who onboarded on eTIMS do not have the stock management module. And then we have two more solutions that we are in the process of implementation, and one in the process of development. We have the reverse invoicing solution. What this does is that addressing the concerns that have been raised for farmers, for example, who absolutely may not be able to use any of the solutions available, including the USSD, then we are saying that we are giving them an opportunity, if their transactions are being captured in a platform that the commissioner trusts, so a trusted platform, then we can get the hold of those transactions from KRA and any party that is transacting within that platform, so that if this information is transmitted to KRA, then this by itself will be considered compliance by all means. The second solution is the buyer-initiated invoice. Now for this one, it's the taxpayer himself who says that they're not going to be able, they'll have to log into one of our systems. It's going to be the USSD solution or the eCitizen platform, and they're going to say, look, I'm not going to be able to generate invoices for myself, but I nominate this person, this entity, this PIN. Anytime I deliver, and I will give an example of those people who deliver to our supermarkets, for example. Anytime a delivery is done, then that person also raises the invoice on their behalf. So for these two solutions, for the reverse invoicing solution, we are doing it on case-by-case basis. For taxpayers, for example, an exporter, the coffee sector, tea sector, they have a platform that they're operating on for purposes of payment, and the manufacturing entities. So they can come forward, show us what information they are capturing on their platform. On our end, we are able to advise now this other information needs to be captured, and key is PIN, because for tax purposes, we need to identify the entity, the unique identifier, or the ID number. So those will be able to prescribe which information that we'd like to be captured for purposes of this. So those are basically the solutions that we have. And if you see now, I've mentioned, if you're on the online portal, if you're on the simplified solution, if you're on eTIMS, if you'll be using the reverse invoicing solution and the buyer-initiated solution, for now, you may not need to capture your stock records for purposes of tax. So we can go to the next slide. Something I think Alex has touched on exemptions. So for exemptions, the Section 23A had given provision for emoluments, imports, airline passenger ticketing, investment allowances, and interest income, and then it said and similar payments. Now, when you look at the regulations that have just been published, there's a bit of an expounding of what similar payments mean. For example, for investment allowances, we have said also including internal accounting adjustments. So this could include aspects such as bad debt adjustments, foreign exchange gains or loss adjustments, wear and tear adjustments. So those are have actually been expressly exempted from provisions of electronic tax invoicing. Fees charged by financial institutions. Previously, we had interest income, but now we are talking about transaction charges. If you are making a withdrawal deposit, there's that charge for that service, then that is also exempt, including services provided by a non-resident person without PE, a permanent establishment, sorry. So these are imports actually. But then many people were asking questions about expenses they incur when they go abroad for furtherance of business. Then how do they account for this? And now we are saying these are actually exempt. So hotel and accommodation, if you're out for purposes of furtherance of business, then this is actually exempt. And finally, I think a new one which does not fall in any of the categories, maybe it could fall under emoluments, is expenses subject to withholding tax as a final tax. So these have been exempted. So like, for example, if you're in a SACCO and your dividends, you are paid your dividend, you know there's withholding tax that is charged. It's usually a final tax. We are saying you don't have to give your SACCO an electronic tax invoice. That is a final tax, and it's the information that we receive is sufficient for purposes of tax. So if you want to apply for exemption, now we have the bases that have been defined as per the law, but then you may feel that you still need to apply for exemption. The law now provides for, when you're applying, because you need to make an application, you also need to define what is going to be the alternative method of recording, storing, and transmitting transaction data. Remember, our core objective is getting the transactional information, as we have seen from the earlier presentation. So our focus is mainly on eTIMS right now, but then any other method we can get to get the same transactional information. So someone needs to apply with this in mind, and this person does not have, Part C says, does not have to be under the mandate of any other ministry or regulatory body. So if you have an independent system, you don't have to be like for example, coffee, they are under the Capital Markets Authority because of the auction, and they have a platform that we are actually integrating. So you don't have to be under the mandate of any regulatory body. As long as you have a trusted system and the commissioner is able to confirm, then you can apply, give us an alternative to get the information, then we exempt whichever parties that you feel need an exemption for one reason or the other. So basically, I think that would be my presentation. You can go to the next slide, but I think that would be it for today, so that we give more room for question and answers. Thank you.
If you have any questions, feel free to put them in the chat box, and we'll be happy to address those. And as you type out the questions, maybe Akamba, I see one of my friends from South Africa who is into digital services. And perhaps the question would be, I'm providing digital services through a platform that is outside of Kenya, but to consumers who are in Kenya. Would that particular service be exempt from eTIMS requirements?
Yes, it's part of the provisions we've given for express exemption. So you can even see, even at this point where we're even rolling out the VAT auto-populated return, but we have not required that the non-residents without permanent establishment to issue electronic tax invoices. We are taking the transactions as is between them and the Kenyan buyers. So those transactions are acceptable. We accept any form of record of transaction, the way they are maintaining the records as it is right now.
Lenny, you could be reading the questions if there are any on the chat.
But maybe I can qualify that also a bit. Sorry. As much as, yes, we've made that provision, we have found some instances where some of these non-resident taxpayers would like to onboard based on their business model, and especially these who are operating platform like the taxi hailing cabs, because the persons who are transacting on those cabs are resident persons who now we require to onboard eTIMS. So they're telling us, look, we already have this information. For example, if you're looking at Uber or Bolt, they already have the invoice information. Their consumers are already getting some kind of transmitted in form of an email that is sent to you for the invoice. So what they are saying, we could cover this, the drivers, for example. So these ones we can allow them. We are actually working on allowing them to do the reverse invoicing, so that now they avail the driver information to us, in which case then if the driver does not have any other source of business, then that is considered sufficient for compliance. Thank you.
Lexi, on mute. Okay, so I see we have a few questions that have come in. The first one is from George. Does the supplier need to give consent for reverse invoicing to be used?
Sorry, do we take a few questions, Leonard? Maybe three at a time.
Like 3 or 4, yeah.
Okay, sure. So we have the first one from George. Does the supplier need to give consent for reverse invoicing to be used? Second, we have Joyce. Please explain the process of integrating eTIMS on QuickBooks. And the third question we have, during tax computation, how will KRA know which expenses to remove since maybe the seller did not declare the PIN of the buyer?
Okay, thank you. So I'll take those three. Yes, about the supplier giving consent for reverse invoicing. Yes, remember that the transactions that are being transmitted do not belong to the buyer. They belong to the supplier, and they need to take responsibility. It is their declaration, and as much as maybe for one reason or the other they are constrained, they need to know that the transaction data, that data privacy law right now is a bit strict, that this information is actually being availed to KRA. The provision that we are making, for example, for the buyer initiated invoice is such that at the point it is being generated, there is actually a prompt for that person to confirm that yes, my transaction was worth 100K, therefore it's okay, you can have that information. So yes, there's need for the supplier to give consent. It's not going to be done expressly without them knowing that it's their transaction data that is being given to KRA, because remember, at the end of it, even as we are saying that eTIMS is a transactional system, at the end of it, it has a tax implication in that when you're making your declarations, then what we are comparing with is what you have transmitted to us as tax invoices. So someone has to own them. The experience we've had in the past, in this past month, March, when we tried to do the VAT auto-populated return, we had quite a number of taxpayers actually denying their own sales, saying that they don't know where that data came from. But upon analysis, actually they come to determine that it's within their own business premises for one reason or the other. This information was actually relayed to KRA. So it's important that the supplier is actually in control of the data that is being sent to KRA. So the process of integration, I think if I start explaining, I won't be able to get to the end of it. But what I would say is that the first thing we normally do is that you need to reach out to us, and I'm going to give you the address. It's TIMS. I think I'll type it in chat at some point. teamsupport@kra.go.ke. You reach out so that you express the interest to do the system-to-system integration if you're doing it for yourself. So what we give you is the test environment, we give you the specifications, then you go on to build your own software. But then there are those who do not have technical capacity as themselves, because that's not their main business activity. Then we have some third-party integrators published on the KRA website. I think when you're searching, you search list of third-party vendors, and you'll be able to see the list of those who are permitted to help with integration on behalf of taxpayers. So you can engage one of them and they help you do that. But then you can also write to us if you want to do it yourself. So how KRA will know which transactions to disallow? I think the bottom line, I said PIN is the main identifier. So someone who needs to claim expenditure, input tax, you must have your PIN captured on the tax invoice, because at the point you've seen with the VAT return how much outcry there was. It is because most taxpayers actually did not give their PINs. So when it came to their sales, they could see a good representation of their sales, but purchases were not there. So it was looking like the taxman is trying to steal from taxpayers, because it is at this point that taxpayers actually reduce the tax liability by declaring their purchases. But it is because also taxpayers also did not give their PINs. So you must give your PIN, because if you don't give your PIN, then the supply is considered to be an end consumer supply, in which case it is not subject to deduction for income tax purposes or input tax claims for VAT purposes. Thank you. I believe those ones are the responses for the three.
If I may add, then I think maybe the taxpayer is thinking, I'm doing my financials, I'll still record my sales, and part of my sales will include sales that and purchases will include things that didn't go through eTIMS, as an example. And what I know is that if you're going through an audit, it is very easy to then compare what you're recording as your sales and purchases in your financials vis-a-vis what is it recorded through eTIMS or your VAT returns. So that is also an avenue where one can quickly know that there's a disparity between what is being declared by the taxpayer and yeah, so I'd add that.
Great, thank you, Hakamba and Alex. So next we have Amar. Kindly advise, what is the situation with professionals? For example, doctors on issuing eTIMS invoice. Next we have, did you mention on how or where an individual can get the eTIMS software installed on their device? And lastly, we have, what is the scope of financial institutions whose fees are now exempt from eTIMS requirements? Does it include entities, for example, digital lenders?
Okay, thank you. So now, once again, for the professionals and specifically doctors, professionals, I think I mentioned that as yourselves, you're on the online portal. So we don't have exemptions for professionals. The doctors have raised pertinent issues, which we have tried to address even with the engagements that we've had with them. And key with the doctors, I think I have to mention, is the issue of now, if I go to hospital, and that should be a concern for all of us, and you outlined very many diseases, and then now this is being captured and actually being sent to the Revenue Authority. The comfort that we have been giving the doctors is that even for those who are onboarded, and we have proof to show that, they have not been giving us definitions of what people are suffering from. If we are talking about lab services, if you're talking about consultation, we are really not saying then what we are receiving from our end, then at the end of it, what was someone suffering from. The medications might be defined, but when it comes to the whole process of the diagnosis, we are not taking those details and have never intended to take those details. And I think that's the main issue that they were raising, including the classification of their taxes, because there are some who are consultants, there are some who are doing locum, for example. How do we define what tax applies to what? Because consultants, there's a withholding tax, but for those on locum, we are saying they're secondary employees. So those ones are the bonds of contention, but it's according to the alignment of law. And this issue, I think maybe not discussing so much. Those are the issues that have been raised, but right now it's in court. There's no stay order, but it's in court. We are waiting now the ruling of the court. But those are the issues that were raised. But as you have seen, there's no exemption for professional bodies. How and where one can install the software now, I have mentioned that we have the details on the website. When you go to the website, you'll be able to see that what you need to have with you. First of all, when you're applying, you'll be given the links for application, but the link is etims.kra.go.ke. Once you sign up, you need to sign up, you need to do a service request, upload 2 documents, ID of 1 director, commitment form, and then we approve on our end. Now, after that, there are 2 options. You can do the software configuration for yourself. You are able to. If you're able to, you can get, if you are not able to, you can get guidance from a KRA office to do it remotely. But if you absolutely are not able to also do it remotely, then we invite you to any of our offices, countrywide TSOs. They'll be able to do the software configuration for you. So, and then for system-to-system integration, I said they are third-party integrators. So for financial institutions, we actually left it open intentionally because this issue actually came up. And remember, it's the fees charged for these services. Remember, it's the fees. It is not the entire service. The fee that is charged for these services is what is exempt, and therefore we left it open for that reason. So it's open for all financial institutions, including digital lending services.
And on that question, Akamba, so if you're just providing a system as a payment service provider and connected to financial services, say, for example, I'm the link between the bank and the customer and providing a platform for that for financial services, would someone say that they fit in then within that exemption for financial services for the fees they charge?
But you see, that's where now the technicalities start coming, because if you're providing the platform, you're not the one offering the financial services. We have these platforms where it brings in the lenders and the, can we call them the lendees, together on one platform where people meet like in a marketplace. You are providing the platform, they're going to pay you a fee or a commission for use of the platform, but at the end of the day, the financial service is being offered by an entity, let's say a bank or another financial organization. It is the banks, because they are going to charge also for those financial services. The products that they are offering, they are the ones who are charging a fee for offering that product. So for you, you are the platform owner, you are not the person offering the service. So it's good to recognize your role in the whole ecosystem, because if your platform is offering, yes, it's hosting people who are offering financial services. However, your service is actually the digital platform. I hope it's clear. And in the event someone maybe absolutely it's not clear what if their financial charges are part of what is exempt, you can always again write to KRA for a private ruling, so that you know for a fact that you are compliant or not compliant, because we are going to have many business models, so it's good to be clear if yours is exempt or not.
Alex, you're mute.
The private ruling is an option for anyone who is not very clear as to whether the eTIMS requirements apply to them. That is quite useful for anyone who is here. Lenny, we can get to the next batch of questions.
Yes, I think I'll do this next question alone because it's a bit long. So it says, hello, one of my vendors based in Latvia started charging VAT on the services they provided. Annual maintenance contract on system maintenance. How do I account for this VAT as well as reverse VAT and withholding tax? Point to note, they have provided a KRA PIN number.
Question.
Next question is payment service provider classified under financial institutions whose fees are exempt. And then for the third question, where a landlord is not eTIMS registered, but is already deducted withholding tax, it doesn't appear equitable to disallow the cost. How can KRA accommodate the tenant in such a case?
Okay, thank you. So again, for the supplier who is in Latvia, yes, they will have PIN. So we have some taxpayers who are actually, especially on our digital economy tax office, the taxpayers who are providing digital services. These are actually exempt from electronic tax invoicing, and yes, they are registered in Kenya, they have a PIN, because they have adopted the simplified framework that we have provided for the digital service providers. So they will have a PIN, yes, you might be doing withholding or digital service tax with them, and they do deduct VAT, yes, and but they're exempt. They're exempt. We can identify them and they're exempt, and you can claim input tax from those services that they provide to you. For payment service providers, remember we said financial institutions. I think a good example is mobile money transactions and the fee that they charge anytime you withdraw, anytime you deposit. That is also exempt. So we just look at services offered, financial services by financial institutions, and since these have been recognized by CBK offering these services, then we recognize their services as financial services and they are exempt. landlord who is not onboarded on eTIMS but doing the withholding, the landlords also need to onboard. So there's a curve here, because one, you need the eTIMS invoice for purposes of you accounting for expenditure. For now, you need to maintain the record of what you have, but you also need to, you can share the details. We've given you the email address, and you can also use the anonymous reporting by KRA, so that this person, we have been doing this, sometimes we have to pursue a specific entities for purposes of compliance because of the inconvenience that people who they are dealing with are having. So you can share the information through the team support, but you also have the anonymous reporting provision. You can also give the details so that we follow up and make sure that this person is registered, because they need to issue an electronic tax invoice. So by them inconveniencing you, then we know that there's going to be a problem, but they need to issue.
The person doesn't intend to take advantage of the payment to the landlord as an expense. So it's just your house where you live. Should they still insist on getting an eTIMS invoice from the landlord? I get it from the side of you're operating a business and you want to claim the expense, but what would be your thoughts on this?
So basically, as it is right now, the law actually applies to everyone. It applies to everyone. However, you can see that our focus, especially since January, we have not focused on B2C transactions so much. They are within our scope, but then we have not, because we have a bigger, I think, can we see a bigger bone to chew, especially for B2B transactions. So I think earlier you had said if KRA would consider phasing. We might not be outrightly doing a phased approach, because when the legislation came out, it did not actually make provision for a phased approach. However, on implementation, right now we have always focused on the B2B transactions, but then with enforcement, we are actually going to also cover the B2C transactions, because we have, when we are considering revenue impact, we actually have some substantive transactions that are actually B2C. Look at like rental income, for example. You look at the retail outlets, for example, you're looking at saloons, garages. So these might be areas of interest for us as we move on, and you'll be able to see efforts towards that. Yeah.
Set.
Okay. So we have Amar. How do you account for prepayments and accruals with eTIMS? For example, audit fees for 2024, 2025, but fees need to be accrued in books in 2024. Next, we have Amar again. KRA has focused at Mamamboga, Boda Boda to issue eTIMS. Have KRA focused how these people are going to file annual returns, as they are not well educated? They don't even know what documentations they need to have. And for the third question, are subscriptions to clubs, societies, and other registered bodies needed to have TIMS invoices?
So thank you. So again, I think we would like to separate once again invoicing and whether that transaction is prepaid or accrued. We need to separate the two. When it comes to actually having a record of transactions, then you need to just note, has the transaction actually happened? If this transaction has happened, it doesn't matter whether this income is earned or accrued, you need to generate a tax invoice for it. We have not started doing the work around the pre-population of the income tax return, but these are considerations that you are going to have when you're doing this auto-population, because it's actually something that is going to matter, that some payments that are, for example, we've actually talked about audit fees that are due in 2024, but sorry. but prepaid in a previous period, and maybe a tax invoice actually raised within that period. So those are the considerations that we'll make once we come to this phase. But for the time being, you just need to know you still need to generate the invoice at the point where a transaction is actually completed, or it's deemed completed. For Mama Mboga, Boda Boda, yes, we've focused on this because, again, there's a simple, I think, assumption that Mama Mboga and Boda Boda are not transacting with businesses, business entities, and we've come to determine that they are, and therefore some of these Mama Mboga and Boda Boda already have onboarded. And yes, there's also a case in point that there's always an assumption that the annual return that we do, and right now the campaign is on for filing your return by 30th June, the assumption is always that it's for people with employment income. Now, the message that we are driving now is that this is not only for people with employment income, but also for those who have business income. And yes, a Boda Boda is actually a business. So what we've realized, actually, it's a point of realization, because we have always done this campaign every year, but how deep is the lack of taxpayer education is what now is coming out very clearly, and initiatives towards this are actually going to go down to the grassroots, so that now it's like we are starting afresh now that we are doing eTIMS, then we create awareness on the tax obligations of taxpayers, because we have realized that there's usually a big gap, despite the fact that annually we always have a campaign for return filing, although the assumption is always going to the fact that it applies to those with employment income. So slowly, I think it's just changing this narrative so that everyone knows that by you being a person who is transacting business or you're employed, then you are a taxpayer, so you need to do your annual return. No, for subscriptions, yes, they need to onboard eTIMS, because that is a business income for that particular business entity. So I know for income tax purposes, there are some kind of provisions that have been made for subscription fees, but that provision is not available for eTIMS, so they need to onboard. Thank you.
If I'm receiving an invoice from Ms. Park LSK as an example, that invoice should be eTIMS invoice. Okay. Perfect. Lenny, maybe the next set we still have about 20 minutes for questions. We left a lot of time for Q&A. So keep the questions coming. We'll attempt to answer the most we can within the time we have. Lenny, please proceed.
Okay, we have a question. We have been advised approvals are required for appointing an integrator. The process of approvals is slow. Can you kindly assist us to know whom to approach, as we want to process our invoices via eTIMS, but we have to wait for approvals? And next, how do we claim input tax from suppliers exempted from eTIMS if the transaction does not appear on the auto-populated Excel sheet? And the last, does the limitation on deductibility of expenses not supported by eTIMS invoices extend to items, for example, provisions?
I think I'll need a clarification for the last one. It's not clear, unless maybe Alex understood it. For me, it didn't come out clearly. Now, appointing a third-party integrator, maybe also a clarification of if this is an existing one or it's something that you're starting to build your software right now. If you're shifting solutions, I'm going to make that assumptions from maybe your own client solution, but then now you want to do a system-to-system integration. You probably have actually reached out and made this request, maybe through a letter. I don't know if this is the approval we are talking about, but then again, I'll still give my email address for this one to be able to send me details, because I'm not very sure which part of approval this has not been done, so that we can be able to provide support on our end. But I'll provide my email address for this purpose. And then claiming input tax from suppliers who are eTIMS exempt. like for example, these taxpayers who are digital service providers, for example, they're exempt. So we are allowing them to actually file their returns with those invoices. Now, here's the thing still. You must make sure that your PIN is captured by these entities, and then you will claim input tax after they have filed their returns. So remember, you have 6 months to claim input tax. What we want from them is once they make this declaration with your PIN details, then on our end, when you're claiming input tax, you are able to reference it to a transaction that has already been declared. So your claiming of input tax is going to be a +1. So within this month, for example, you incur this expense, you can claim input tax the next tax period. After he has filed, now this month we are in the month of April, they'll file their return by 20th May, and you can claim your input tax by 20th June. That's what I was trying to explain. For the last question, it's not very clear for me.
So maybe I can read it again.
Right. Maybe to clarify. So I think where the question is coming from is you have things like provision for bad and doubtful debts. You have things like depreciation, which are still expenses for the business. Those ones are internal, won't go through like an eTIMS system. So is that still allowed, or what is the workaround?
Okay, so again, it's still the same thing. We talked about, I gave examples of bad debt, for example. So the adjustments that you do in the income tax return are the ones that have been included as part of, like we gave the express example of the investment deductions, and then we had said and similar payments, but then now we have said any adjustments that we are making for income tax purposes. So if it forms part of the adjustments, then they're exempt. But again, I'm going to still give a disclaimer on this and focusing on investment deductions. Yes, we have said for these adjustments, you don't need an electronic tax invoice. But remember, when you're acquiring capital equipment, like let's say machinery, at some point you either imported it or bought it locally. So at the point of purchase, you have an electronic tax invoice, or you imported it, in which case it was exempt. So if you bought it internally, you have an electronic tax invoice, and therefore at the onset of this, before you even come to the adjustments in the income tax return, you should already have you met the requirements. Either you have an electronic tax invoice or you imported it, in which case it was still exempt.
Okay, so I think we have a repeat question. I don't know, Patrick, maybe I don't know if your question was not answered correctly. However, he's asked again, one of my vendors based in Latvia started charging VAT on services they provided, annual maintenance contract on system maintenance. How do I account for withholding tax? Next, we have with tax-exempt certificates need to onboard eTIMS. And for the third question, does the 6-month rule of claiming input VAT on purchases still apply on the auto-populated return?
Okay, so for Patrick, again, we have two tax heads. We have VAT, in which case we have said they are exempt, and therefore they may not give you an electronic tax invoice. However, depending on the service that they are offering, we have Section 35 of the Income Tax Act. For example, for provision of software, they might be falling under this category, in which case there's withholding tax, but it's income tax. Remember, it's income tax. It's not VAT. So VAT, they'll be charging whether or not it's a B2B or B2C. They'll charge VAT and submit to KRA, and we've said that you can claim input tax in the manner I outlined earlier. But then also we have some of these services that are subject to withholding tax, and it is you who is going to withhold income tax. Otherwise, this person is also supposed to declare digital service tax. So if the services they're offering are not under Section 35, then they'll be doing DST. And DST, it is them to declare, it is not you. But VAT, it's an end consumer tax, which it is you who is paying the VAT, but they will submit. And then you can claim input tax. I'm hoping it's clear. And then the 6-month rule for the auto-populated return, yes, it applies. And then again, please ensure, once again, provided the transactions have been transmitted to the KRA system, so you can take the 6 months. So you might miss this month. For example, you can have the adjustments happening this month, so that for where you did not have your buyer PIN captured, you make sure that you have your proper invoice, and then the next month you can claim input tax. So you have the 6 months, provided you make sure that all these transactions are in the system.
Any other questions as we come towards the end? Our session was booked until 11:30. Back to you, Lenny, if you have questions on your end.
So we have a comment. Yes, we have a question. If it's integration to eTIMS, where you need the technical capacity, InterSwitch, okay. All right, he's just advising that they do eTIMS, okay. So for the last question, do business with tax exemption certificates need to onboard eTIMS? I believe you have answered that, Hakamba, yeah?
Yes, but see, we are still coming to this bit where we are saying someone who has business income. There are other tax processes that go on the side, especially having exemption certificates because of one reason or the other, because you are delivering, for example, a government-funded project and you've been given an exemption by the cabinet secretary, whichever that is. Then in that case, even if you have the exemption certificate, but you have business income, in which case you need to declare that, you need to declare your transactions through the system. I'm going to even give another example. The special economic zones, EPZs, they need to onboard eTIMS also, despite the fact that they are not considered, they have a special provision for their supplies, but they need to onboard even for them.
I see. I think our participants are happy. The questions have come to an end. I don't know if there's there's one that has come up. Maybe this one I can read for you, Hakamba. How will we claim imported services when filing annual returns? Is it through data input, or there'll be a process of verification of such expenses? So for expenses for imported services.
I think I had mentioned for income tax especially, we said that we are soon coming to the consideration. We haven't started yet, based on the different scenarios that are playing out for you to be able to claim expenditure for income tax. Then we said that for any services you received from other parts of the country, of the world, they're going to be exempt. Now, how we are doing the annual return, please give us a bit of time. I think towards the end of this year, or sometime maybe in the second half of this year, we'll be able to define to you exactly how we are doing that. We'll be able to communicate that.
Right. The exemption for imports is imports of goods and imports of services. Okay.
Yes,
right.
that is correct. It's goods and services. For goods, we know that you're going to pass through any of our port of entries, so we get the information from there. That's why they're exempt. For services, we said imported services are exempt.
Okay. Thank you for that, Lenny. I don't see any other question.
Yes, that's it for the questions.
Okay, fine. I think I want to leave it to Lena to give closing remarks and also a vote of thanks to Hakamba and all the participants. You can see on the chat that we have a form which we want you to fill and provide us with feedback on how this went and what other kind of topics you'd want us to handle. I see one last question before handing it over to Lena. So maybe you could read it out, Lenny.
Yes. So the last question we have: clarify TIMS requirements for DST clients and claiming input VAT.
Okay, so for DST clients, when it comes to claiming of VAT, remember that you are getting a service from a non-resident person without permanent establishment, and this person is providing digital services. So they are going to charge you VAT. We, on our end, have registered them. We have about 300 right now of such registered entities you are transacting with. So they are required to file returns in these jurisdiction or appoint a tax agent to do it on their behalf. Either way, we have their transaction information. What we are asking is that they are going to file their return. For example, if you actually transacted with them in the month of, let's say, March, right now we're in the return filing process. So by 20th, they are going to have filed their return for April. You are not going to be able to claim input tax if by now, okay, by 20th they've not filed, maybe they filed towards the end of the day. You won't be able to claim input tax from them because we can't see those transactions. So what we are going to ask is that allow them to file. So you give them a +1. If the transaction was in March, then you'll skip the month of April because that's when they're filing their return. Then when you're filing your return in the month of June for April, you can claim input tax. They should have declared it. And then they should have declared it by actually capturing your PIN. Again, if you don't give them your PIN, then because they are declaring VAT for both B2B transactions and B2C, then it will be in the consolidated amount. So you won't be able to get that credit. So make sure that your PIN is captured as a line item for you to be able to get credit for that input tax. I hope it's clear now.
Okay, Hakamba, I think he's just added a comment that they pay booking.com but are unable to claim VAT.
So those are the things to check. And Aaron, you can also write to me. I've told 2 people to write to me. The one has said they're going to write MS guest. Aaron, you can write to me because I'm also in charge of the Digital Economy Tax Office. So I can follow up with booking.com for you to find out what may be the problem. But ideally, you should be able to claim input tax.
So final comment before I leave it to Lena. So last month, around 20th, we had, all this rush, and Kerry then was gracious enough to allow people to file through the old VAT filing system. Are we likely to see that, or should guys get prepared to ensure that they file accordingly by the 20th?
So you can see, like, for this month, the system is open for this month, but then most likely for the month of May, we are going to revert to the auto-populated return. So what we are going to ask, continue providing your PIN for purposes of you claiming input tax, because see, even if we've left the system open and you are filing in the previous way we were filing, but then we are going to do the system validations to make sure that these invoices were actually transmitted. So it's important that we maintain, since we onboarded, now we go to the actual implementation of the system by ensuring we transmit our invoices, because if we don't transmit, then someone else cannot claim input tax. 2, we make sure that whenever we are transacting, we are buying something, we provide our PIN to be captured so that we can get credit for the input tax. And any other, we've had some of the entities, big companies actually, that did not make provision for buyer PIN when they were doing the configuration or the system-to-system integration. So they had their clients inconvenienced because all their PINs that they were capturing in one manner or the other were not actually being transmitted through the system. So for any of you or your clients who might be having such a scenario, then they may need to do a configuration of their system to make sure that the buyer PIN is actually being captured in the right field so that it's transmitted and so that their clients can also claim input tax. But we are also going to have the continuous engagement for the VAT auto-populated return so that all of us get ready for May, because likely we are going to switch on the system again.
So let me then welcome Lena to proceed with the closing remarks and vote of thanks. Thank you.
Thank you so much, Alex and Hakamba, for that very enlightening session. Thank you for all our attendees and engaging us in the comment section on your questions and seeking clarification on issues that you're facing around the implementation of eTIMS. I believe Hakamba has already shared her email in the comment section. Alex and I are also available should you need any advice or assistance in ensuring that you're compliant. For Hakamba, again, thank you for making time. I believe it's a very busy period for you, especially with what is going on around eTIMS, and we do appreciate the time that you have made to just be able to address the concerns of our clients and the attendees of this webinar. We appreciate you, and we hope that we'll be able to have even more future engagements as time goes by. For the webinar, your feedback is important to us to help us improve, and also to probably see how we can also better address some of the concerns, especially about future implementation of eTIMS. Please feel free to give us your feedback on the link that I believe Portia has shared in the comment section. We do value your feedback. Hakamba, I can see a last question by Aaron. His question is, when are we likely to see the buyer PIN from the invoice checker to assist in confirming the same?
We have actually made the system adjustment. We may not be able to deploy it right now because we want you to file your return first. So we don't normally do deployments very close to due date. So after 20th. So in the course of the month after 20th.
Okay. If there is no other question, thank you very much, everyone. We will be able to share the recording for this webinar on our social media platforms. Thank you again for making your time, and we hope that it has been an enlightening webinar for all of you. Thank you and God bless.